Good evening, ladies and gentlemen. I'm Fiona MacAulay. I'm the CEO of Echo Energy, and I'm here really to talk to you about a fairly new company just past our 1-year anniversary that's taken a really rapid journey to establish itself as one of the leading players in the LATAM region as an exploration and production company, a full cycle exploration and production company. Once again, here is our disclaimer, and I'm sure I can answer questions on it or ask you questions on it over drinks later on this evening. So, who are we? Well, Echo Energy, as I said, was formed about a year ago using a platform of a pre-existing company, Independent Resources, which was recapitalised with a combination of a bond and some equity to become an exploration player, a gas-focused, AIM-listed exploration company looking to create an asset base in South and Latin America. Over the course of that year, we have very quickly acquired a really significant asset base in Argentina, alongside some other acreage that we hold an option on in Bolivia. And that's going to provide us with a very exciting opportunity for growth. And we're seeing already the results of that growth in just a very short space of time with our first discovery well that we announced on Friday of last week, which I'll come on to in a moment. So we are listed on the AIM market. We have a market capitalization, I think, just before starting here today, of about 60 million, so slightly more than when I put this slide together last week. And we're a very liquid stock. We trade about 1.5 million shares per day, so that we do have a good amount of liquidity, which enables people to trade those shares. And on some days, indeed, on our bigger trading days, we can trade as many as 10 million shares. So as I say, launched in March of last year. I came into the company in July of last year, so I'm just approaching my first anniversary there myself. And I came into effectively a completely blank canvas and was asked to build a company. How do you build a company? Well, you can't build a company without a great team, and within a really relatively short space of time, we put that team together. Sitting over in the audience with me today is Julian Besser, who's our Vice President of Exploration. So he's the person that really checks out that the assets that we're looking at and the assets that we're going to progress with have that technical competence that we need to be able to create value. We have Will Holland, our CFO, who I think is going to be joining us after the presentation. So again, he'll be here to answer any questions you might have on the capital side of the company. And just recently, we've added Jeff Probert to be our Chief Operating Officer, because when you have a very operationally focused company, having somebody who really understands the mechanisms on the ground and has a vast experience in operating in remote environments is clearly very important. And lastly, as part of that executive team, we also have our regional representative who spends a lot of time going around the region and ensuring that we are known to various government bodies and regulatory bodies. So it's all about the team in the exec. But not only that, it's about the team that make up the board as well. And for us, we're delighted that we have such a strong board. We have James Parsons, who some of you might know is CEO of another larger E&P company, Sound Energy. And alongside him, we have one of our cornerstone investors, Fiona MacAulay, who invests in us and has about 9.5% of us via a vehicle called Greenbury. And Steve White, who, again, in the E&P world, some of you may know for his chairmanship of Genel, operating in Kurdistan. So why South America? What was the draw to this part of the world? Well, it's an area of the world that really has a growing gas demand and a growing energy demand in general. It's an area where supply is constantly greater than demand, and where we see a lot of swing imports into the region. During winter months in particular, across South America, almost all countries are having to import energy because they don't have sufficient to actually feed that growing demand. And that demand is across a number of areas. So we have domestic demand, so going into heating and lighting and just general energy into the households. We have power demand where we have gas to power plants taking over from the former coal-fired power stations. We have CNG, so compressed natural gas. Across South America, something that we don't see as much over here is that most vehicles actually are powered on CNG, including all the buses, lorries. If you get into a taxi, make sure you haven't got a big suitcase because the boot space is pretty much always taken up by a CNG tank. And lastly, industry in general, which is one of the biggest end users and most growing end users. So we have this array of different consumers. And we also have a very significant network of infrastructure. Here you'll see all of these white lines across Argentina and South America as a whole. And that's existing infrastructure that was put into place by governments a few decades ago that nowadays is actually running at much less than its full capacity. So a large network in place. If you find gas or oil, hydrocarbons in general, there is actually a route to your market, and that market is across the continent, both within countries and across countries. So we have exports, for example, from Bolivia into Brazil and into Argentina. We have imports into Argentina, both in LNG terms from, for example, Trinidad and North America. And we also have exports out into Chile. So we have cross-border transport arrangements in place, and that makes it a great place to go and explore and to look for gas. So how did we go about actually entering into the market? Having established that we wanted to enter into Latin America, we actually put teams on the ground and spent a lot of time in country looking at potential asset bases. You can sit in London and you can have flyers coming across your desk of other listed vehicles, or you can send your teams down there and you can just spend time talking, understanding, and getting to know people's portfolios. One thing that I didn't mention was actually in Argentina, that there are a lot of private companies. It's been an area where there's been little inward investment over the last few decades for many obvious reasons. Obviously, we've seen a real calming of the political situation over the last few decades. We've had a little bit of an upset over the past couple of weeks, and I'm sure there'll be some questions on that in a moment, but I think we're fairly confident that situation has stabilised. But actually, finding opportunities that aren't on the open market, we need to go into areas like this. We got to know a specific company, Capitalization America. It's a large private conglomerate. Most of its business is actually taken up in the airport space, so the 7th largest airport operator in the world. But they actually do have a large energy division called CGC, which makes up about 20% of their overall structure. They're currently valued at around $2.5 billion. So this is a massive company. We are, as I said, currently have a market cap of about 60 million. So as you can see, there's a differential in scale. But we managed to get a seat at the table to go in and to discuss with CGC how we could find a mutually beneficial way of cooperating. Their asset base is down here in the Austral Basin, specifically in the Santa Cruz province, which is right down at the southern tip. That's about, so Buenos Aires is here. That's about 3.5 hours flight, just an internal flight. So it is at the right at the southern end of Argentina. Having said that, there is a pipeline that goes straight up to Buenos Aires. That's the San Martin pipeline. And this basin is actually historically one of the oldest basins, hydrocarbon producing basins in Argentina. It produces about 22% of the country's gas, so a very well established basin here. Having gone in to meet with the company, we found a number of assets within their asset base that interested us, and we came up with a transaction to take a 50% working interest across 4 of their licenses. 3 over here, known as CDL, and 1 over here, known as Tapiaiki. And through putting together that accumulation of licenses, we've actually created a full cycle company in the E&P space. What does a full cycle company mean? Well, actually, on the day of completing the transaction, which was the 4th of January this year, we actually became a producer in our own right. So we had a 50% working interest in the production from these licenses, specifically in Fraction C, which delivered to us 1,000 barrels of oil equivalent production on a daily basis. That means that actually a third of that approximately is in crude oil as we would know it, and 2/3 of that is in natural gas. The oil is produced and then taken to a storage site here in Rio Gallegos, from where it's exported directly to market. And for those of you that in any way follow the Echo story, you'll have seen that we had our first exports of crude directly to the export market on April the 4th. Our gas, on the other hand, goes straight into this network of infrastructure. Our gas is sold actually at this point here, at this tariffing point here, directly into the pipelines that go straight up to the major market areas. So we have no tariffs. So as part of this acquisition, we actually acquired this infrastructure, processing facilities and internal infrastructure within the license, which means that when we go about our exploration business, actually a discovery can be brought to market really, really quickly. So we've got this rapid monetization process that enables us to deliver value back to you, the shareholders. We did a fairly unusual transaction when we acquired the acreage. Our concern was not to use the limited amount of cash that we had in the bank. At the time we had about £26 million, but to see something that was going to enable us to build that resource, to build that value within the company. So we put a very small amount of cash on the table, $2.5 million, and then to that we created a work program that is actually earning us that interest. But we managed to convince the party to allow us to come into the asset as a full partner on that first day of the transaction on January the 4th. Additionally, for us, being able to control that spend, being able to determine where we want to drill the wells, letting Julian actually decide what the subsurface is like and where we want to target that exploration was massively important to us. And so we negotiated a deal where we took what we called the technical operatorship. So we're the people actually driving that work program from the technical side, from the subsurface side. But what we didn't actually want was to be the face-to-face contact with the government, certainly not in our first transaction. And so we've left them as the nameplate operator, as is the term, whilst we get to do all the fun bits behind the scenes. So we're delighted with that. So what have we been doing since January? Well, that's just over 5 months ago, and I think by any standards we've had an incredibly active start to our operations. We started with a series of workovers on this little area here. Well, what is a workover? So rather than drilling a well, there were a number of wells that existed on this acreage that had previously been drilled by the old state company YPF. They'd been drilled into this old oil field, which was in production from 1984 through to 2012. And just to give you a sense of scale, that's about 7 kilometres across. There's 122 wells had been drilled into this field over the course of time. It's not been producing, as I say, since 2012. And one of the things that we noted was up here on the eastern flank of this field, while the field was being delineated, it was just done in a very simplistic fashion, just drilling out as far as the oil stops in any direction. Well, when they did that, they actually went into what we call a primary gas cap. They didn't have an exit strategy for gas at the time, and so these wells were just left with casing in them, but without any kind of production. So we brought a workover rig in, which is a fairly small rig. We went in, we perforated these, and we've been flowing gas to surface. We flowed gas to surface for 3 weeks just to check how well it performed, and then we've shut it in. So we're now waiting to see the results of the pressure build-up. So that was a really successful operation, followed by which we did a well in the centre of the field and produce oil from an old oil well. So we've been rapidly establishing how we can rejuvenate and rejig this field and bring more production online very quickly. We've also started a 4-well exploration campaign, so drilling new wells, 4 wells targeting 4 different prospects. The first 3 of those, Estancia La Maggie 1004 being the first of which that we completed last week. The first 3 are by design not related in any way, shape or form, which means that we haven't got to suddenly scramble around and think of any changes based upon results. But the 4th one was dependent on the results of this first one. Having had successful results at the very upper end of what we had anticipated, which we're delighted with, we will now be drilling this well, Los Chaquinas, as the 4th well in the programme. Each of these wells has the capacity to add a certain value, if you like, to the core NAV of the company. The first well in the mid case, we estimated to be able to add about $27 million to our core NAV. The upper end of that scale was about 40 million. So as you can imagine, we're delighted that with a market cap of £55, in a single well we can add a significant value onto our core valuation. So those 4 wells are going to take us about 3 months to complete, and we should be starting the second of those 4 wells over the next couple of days. So exciting, if nail-biting times. That is the sort of core fundamental part of the work that's been going on at the moment. But as we move over to the west here, we move into this really exciting frontier acreage where we've got much less information. These are big areas, by the way. That's about 5,500 square kilometres, so about the size of Trinidad. So really massive. We've got a number of prospects which we've delineated on the existing data that we have, including wells that were drilled back in the late 70s that have already penetrated big gas columns. So just to put this into perspective, we had a couple of wells here that blew out. We had a well here with 120 metres of gas that were never completed by the incumbent YPF because they were looking for oil. This is transformational for a company like Echo, because 1 TCF, 1 trillion cubic feet of gas that we could discover in any one of these leads that we have at the moment could deliver a value to us of $500 million. So that really is a massive multitude. It's 10 times our current market cap in terms of where we could be going here. And we have an independent reserves report, which in the high case has mapped out a total of over 22.5 TCF of gas that could potentially be in place over this license area. So for us, that's massively exciting. We've got a work program to shoot seismic over 2 tranches of that in the next year. We've just got some very good pricing in, which means we might like to extend that seismic if we possibly can. And all of that will be leading towards us drilling some very exciting exploration wells towards the back end of 2019 and early 2020. I mentioned Bolivia. We have some acreage which is in the heartland of Bolivia. Many of you won't actually know that Bolivia exports a massive quantity of gas into the South American market. It exports over 46% of its own gas out of the country, feeding countries like Argentina and Brazil. And we have some acreage here that sits right in the heartland of that fold and thrust belt. We've got wells being drilled by Repsol just over to a big multinational just over here to the east, and Shell are actually about to spud a well just over here. We've spent the last 7 months actually reanalyzing the 3D, so the seismic data that sits across this, and we currently look as if we've got a very nice prospect that's being developed that we hope would be something that would attract many interested parties, specifically if these wells are shown to be profitable and come in. So we've got a timeline going forward over the next 18 months that is really busy, and as I said, in comparison to any other company, I think we've really set our store out. We have kept to all of the timelines that we've indicated that we would do. We've already had success in some workovers that have added value into our core nav. We currently completed the extended testing on one of our workovers. We've had the first of 4 wells drilled, the first being a discovery, which I can't tell you how exciting that was for us over the course of last week. We've already had our first exports of oil direct into the external market, and our gas continues to be being sold around the continent. All of that adds up to us having the ability in small steps to incrementally grow that value. And just as a timeline, this is a period between now and about 6 months' time. This would be the drilling of additional prospects which we've already identified, but are not currently funded for. And this is additional prospectivity that we would intend to develop through interpretation of our seismic. This, of course, is the transformational exploration that we'd hope to lead to in 2019, and that is just one TCF discovery where we have many multiple chances to actually reach that goal. So I think from a standing start, we've created a company, we've lived by what we've said, and we're trying to grow that value over a 2 to 3 year period to create ourselves as a mid-cap company. So that is all, of course, down to having a fantastic team around me. I think, sadly, we've got almost a century and a half of experience between us, which probably isn't something we want to boast about. But anyway, thank you very much, and look forward to any questions.
So, question towards the back.
Is your company cash flow positive? And if not, when do you expect it to be?
So our company makes cash out of the production. So yes, we're cash flow positive in terms of the amount of production more than covers the cost of production. Currently, we're in an exploration mode, so we're going in there to build value, which means that we have to spend capex to actually build value. So we have to spend the money on exploration wells. For example, the recent exploration success that we had, the dry hole cost, so the cost before we test it, is around about $1.8 million. That has delivered us a valuation, if you like. It's increased the valuation of the company by about $30 to $40 million. So I think by any stretch of the imagination, that's a very good return on the cash that we've put into the ground.
You're obviously an explorer at the moment, but you're obviously going to production as well, so you do have cash flow coming in.
That's right. So yes, we produce 1,000 barrels of oil a day equivalent. So just over 300 barrels of oil, and the rest is made up in the gas production that we have.
Great, thank you.
Hi. How much is the cost of an exploration well?
So the well we've just drilled, those wells are around about 1.8 million on a dry hole basis, which is if you think about the spectrum of how much wells cost. So, for example, an offshore well in West Africa, probably you're talking 60, 70, 80 million. A well in the North Sea, 30, 40, 50 million. Somewhere onshore Italy, you could also be talking, well, it depends, from the low end, a similar value up to a deep well that could be 50 or 60 million. So we're very much at the lowest end of the cost of a well that can be drilled.
Next question.
Hi, Fiona. Very quickly, a couple of questions. On Bolivia, would you be drilling it or will you sell it depending on the Repsol and Shell wells? That's one.
Mhm.
On funding, you have enough money to do the 4 wells, but the big one is Tapiaki. Will we have enough money for that? 2?
Okay, so, yeah, how many questions am I going to have? just 2?
3.
3, okay.
And it's a cheeky one. Number 3 country for Echo.
Okay. So the first question was, are we going to be drilling Bolivia? So let's just go back to the last gentleman's question. How much does an exploration well cost? So in Argentina, onshore Argentina, about 1.8 million, less than 2 million. In Tapiaki, which are slightly deeper, they may be 3 up to 5 million, the deeper we get. In Bolivia, and that depth, by the way, is sort of 1,800 in the wells. We've just drilled 1,800 metres through to 3,500 metres in Tapiaki. And Bolivia would be looking at 6,000 metres through some pretty hard mountains. The cost of drilling is always related to the number of days it takes you to drill a well. As you know, we drilled the last well in about 9 days. Repsol are just coming close to their first birthday on the well in Bolivia. So just as a matter of scale, that will I'll leave you to work out the numbers in your head, but we're looking more like the west coast of Africa kind of numbers for Bolivia at the moment. So Salim, in answer to will we be drilling it? Not in the next couple of years. If we have a success on Tapiaki, then absolutely we might be. But it's really for us about ensuring that we develop that prospectivity. We think it's a really, really nice structure. It's coming through on our structure interpretation as having great potential. How we progress to drilling that, or with whom we progress to drilling that, is something that, as you can imagine, is under discussion. The second question was Tapiaki. Have we got enough money to drill Tapiaki? No, we haven't, not yet. So you know, one of the things that is happening, of course, is with success we increase our revenues. You know, we have the first well has come in and it's been successful. That's going to be on production, I would think, within the next, I'm going to say 8 to 10 weeks. You know, don't hold me to that to the day, because these things can always slip a little bit depending on equipment arriving at locations. Might be sooner. So that will be increasing our production revenues. We're fully funded, as you know, for all the exploration work, for the seismic on Fraction C, for some of the seismic on Tapiaki, but we're not, and that's sort of taking us through to middle of 2019, but we're not as yet fully funded unless we get 4 out of 4 and some development wells on this for a well on Tapiaki.
Will you hold on to the Tapiaki well after the Sam Ellie? Then we have money to fund Echo.
Echo Energy is Echo Energy. We're you know, this is absolutely a company that is forging its own future, and Tapiaki is transformational for us.
Fiona, thank you very much indeed.